I am in beautiful Davos, Switzerland this week. I'm going to do a little bit of work here before heading to the slopes a little bit later on. But I wanted to go through a couple things here. We're starting to see renewed sector and group rotation in the stock market, and that of course is one of the most important things to see in a stock market from a directional perspective. So let me just get right over to the charts, show you guys what I'm seeing, and then I gotta head up there.
So one of the most important things to look for when we see what the probability might be of a say a broader stock market like the S&P 500 to continue higher is to look for its components or its constituent sectors or groups. In my case, what I like to do for the S&P 500 is look at the individual sectors on there. So we've got different ETFs representing different sectors like energy, technology, and so on and so forth. And so what I like to do every morning, I like to kind of flip through these and see what we might be able to see in terms of leadership or lack thereof. And the interesting thing is, if we look at the market right now, is that we've actually seen the S&P 500 break out of a consolidation range here in what is it now? Or I guess mid-February of 2017. We've broken higher, and so it's. But the interesting thing is not just that the S&P broke higher, is that there actually hasn't been any real meaningful outperformance of any one sector besides maybe consumer staple stocks. So if we look at important parts of the market like the XLF, the financial ETF, the financial parts of the market, you can see we're basically just kind of going sideways. We still haven't meaningfully broken higher. So, and if you look at that in relative terms, so the XLF divided by the SPY, you see that here too, we're not really seeing any actual outperformance. We've seen a little bit of outperformance coming out of the energy sector. That's actually something we're looking for. Energy sector looks interesting both in absolute and relative terms. But really, aside from that, and maybe consumer staple stocks, most things have kind of walked in lockstep higher with the S&P 500. So from that perspective, we want to be a little bit more cautious about the potential upside here for the market. So let me just quickly show you a couple things I'm looking at. Energy sector, so this is the absolute chart. And if we look at the energy sector in terms of the relative versus the S&P 500, you can see we've seen a bit of a bounce. But again, nothing dramatic in terms of breakouts or anything like that. We look at, for example, healthcare. That's another interesting market. We're at a pretty interesting spot here from a technical perspective. We have had a lot of technical resistance here dating back to about October of 2016. But if you look at this in relative terms, again, XLV, which is the S&P 5, the ETF representing that part of the market, versus the S&P, not a whole lot. In fact, not really any meaningful outperformance. We've had a little bit of outperformance coming into early February, but it hasn't meaningfully broken anything. We can draw some very simple trend lines, and you'll see that we're just kind of at resistance. So you can draw these lines. They don't have to be so detailed, but we're more or less right at resistance. So we have not had meaningful breakouts out of any specific sector except maybe consumer staples, and that in fact may be a little bit more of a cautionary sign. So the way I look at it is kind of like a race. And speaking of races,
Game on. Sledding run number 1. Fun. A lot of fun. Oh, almost lost that corner.
So Scarlett and I ended up winning that race. But quickly back to the market. The question now is going forward for the next weeks, days, weeks, and maybe months is where is the relative strength, the relative weakness going to come from? I do think the financials will continue to ultimately look good. I'm not quite sure they have what it takes right now to meaningfully, sustainably break higher before maybe taking a step lower. So from my perspective, I want to respect energy and maybe the financials here and parts of the healthcare sector to potentially give us some strength. But again, we haven't seen anything dramatic. So I would be a little bit more cautious. You want to respect the trend, right? Because if you look at, again, the Russell 2000, for example, the S&P 500, here's the Russell, clearly we are seeing breakouts here, marginal breakouts so far, but ones that we have to respect. Until we see bearish reversals of meaningful proportion, and maybe meaningful relativeness from important sectors like financials, energy, technology, it's in my opinion too early to short this market. So look at the stock market as a continuing race between the different sectors and industry groups, and you will dramatically improve your chances of being right.
I think Mama's gonna flip